Stock Market for Beginners Step-by-Step Guide Part 2. Welcome to Cash Treat, where cash is always king. This is an investment strategy with more risk because, in the event of a recession, you'll probably be hit hard, but there's also a lot more potential for quick, high returns. Now, we can look at someone like Cathie Wood, who has made innovation/growth her main way to invest. Over the course of 7 years, her innovation fund has returned an average of 39% per year. That is the standard, over 3 times as much as the S&P 500's return. Therefore, growth investing can pay off big if done correctly. However, there are a few fundamental aspects that we must concentrate on. The most important thing is to figure out where the business is going in the future. Is it going to be innovative or disruptive? Is it going to be the next Tesla that changes the car industry? Or is it going to be the kind of business that gets left behind, like the textile industry in the 1970s, the video rental industry, or the newspaper industry in the 2000s, all of which were wiped out by innovation? Therefore, put on your thinking cap and try to determine which businesses will be disruptive over the next 5 to 10 years. Therefore, self-driving cars, robotics, artificial intelligence, and Elon Musk's blockchain companies are just a few examples of sectors that have the potential to flourish in the future. These sectors have the potential to alter the manner in which business is conducted in the future, and numerous growth investors are concentrating their attention on these particular ones. But you need to look into their finances a little bit. It doesn't make sense to buy a business that will be popular but won't make any money. Therefore, revenue from investments is a crucial metric to examine for growth. Since revenue is the company's total income, we must examine it and, most importantly, ensure that it is growing. Therefore, Yahoo Finance reveals that Tesla, one of the most popular stocks, generates more and more cash annually. Also, if we look at revenue estimates for the future, we can see that analysts expect it to keep growing strongly at a naught rate. The return on equity is the second thing we want to look at because it tells us a lot about the financial efficiency of the business. Therefore, the ratio of shareholders' equity to net income is used to calculate return on equity. This shows us how much benefit we can make as a level of value. We want this number to be as high as possible, and we can find a return on equity for Tesla by scrolling down a little bit under statistics in Yahoo Finance. There, we find a return on equity of 15.6%. Therefore, 15 is not bad, especially when compared to their rivals, which I will demonstrate shortly. Additionally, we can see that Tesla's profit margins are 7.4%, which is an additional metric that helps us gauge the company's efficiency. Therefore, Tesla will make $7.40 in profits for every $100 in revenue. Presently, it tends to be difficult to discern whether these numbers are great or not yet, similarly as with everything. We need to contrast them with different organizations to figure out things. Therefore, NIO, one of Tesla's rivals, has a negative 47% return on equity and a negative 30% profit margin. Ford has a profit margin of 2.1% and an 8.1% return on equity. Volkswagen has a profit margin of 7.2% and a negative 14% return on equity. Another competitor, Nikola, has a profit margin of 0% and a negative 75% return on equity. Therefore, these two metrics show that Tesla actually outperforms all of its rivals. We could say that Elon Musk is a very intelligent man. Another thing that many growth investors enjoy doing, although I don't particularly enjoy it, is examining a stock's previous price to determine whether it is trending upward. So it's easy to see, just type Tesla stock into Google and it will go back 5 years. We can see that every year the stock seems to be going up a lot. This doesn't mean that the stock will always go up, but some people like that positive forward momentum. If you want to get started in the blockchain industry without purchasing individual cryptocurrencies, Coinbase, a cryptocurrency exchange platform, is one example of a growth and innovation stock to look into. We've got Pounds here, a company that uses software to integrate data to improve business decisions. Intelligent Therapeutics is an exciting company that is interested in genome editing and looking to cure diseases. As a result, Peter Thiel, who also co-founded PayPal and was the first outside investor in Facebook, founded this exciting company. So he has a track record that has been proven, and even Tesla, the electric car company, is a growth stock. However, Tesla is so big now that its market cap is $1.1 trillion, so it has less potential for growth on the upside. When stocks are just beginning to gain momentum and are being discussed on smaller platforms like Reddit forums and particular Discord groups, you want to buy them before they get too hyped up. Generally not when they are the subject of extensive media coverage. Therefore, if you buy earlier, you'll get big returns of 10 to 20 or even 100 times. Okay, if you don't want to spend time researching and analyzing various stocks, passive investing in an index fund is the way to go. Although this may appear to be untrue, the interesting aspect of index investing is that it actually outperforms the majority of other returns received by large hedge funds. Therefore, people like Warren Buffett recommend it to the majority of investors. Therefore, an index fund is merely a stock basket that tracks a particular market segment. Okay, for instance, the S&P 500 index funds tracks the American stock market and consists of 500 large stocks. The Vanguard Information Technology Fund tracks more than 300 U.S. technology stocks, and the Vanguard Dividend Appreciation Fund tracks 247 companies whose dividends have increased consistently over a long period of time. So, as you can see, you can buy index funds, a group of stocks that track the majority of the market, depending on what you want to invest in. This may seem odd and almost too simple to be true. What's the catch? But investing can sometimes be as simple as investing less. If you accumulate a low-cost index fund over 10 years with fairly regular sums, I think you will probably do better than 90% of the people around you who take up investing at the same time. I would say that among the various propositions offered to you, a very low-cost index fund where you do not put all of your money in at once is one of the best. So to purchase a record store, you just enter the ticker image of the asset you need on your investment funds, whether that be a world market list reserve, a Chinese one, a land one, or a medical services one. Decide which market segments you want to invest in and proceed from there. Additionally, avoiding excessive weighting is essential. Okay, before you start investing, do your homework and make sure you know the basics well. However, you don't have to be Warren Buffett. Buy your first stock to get started. Keep in mind that stocks aren't too expensive. Ford stock is $20, Apple $180, and Coca-Cola $60. Start out with little money and learn as you go. The worst thing you can do is wait until you lose interest in investing and then invest nothing at all. Examining the current high stock market prices is one possible inquiry. We've been basically in a bull market for 13 years, and prices have just kept going up. Is there a strategy we should have for this, or is there a chance of a crash? Therefore, when investing, we must consider the long term. This is something I learned from Warren Buffett. We must consider whether the market will rise or fall in 5 or 10 years. It will rise because stocks, or businesses, continue to produce and earn money. Therefore, even if we buy now and hope for a crash, the crash will eventually rebound. The most important thing is to not panic and sell when it crashes, and instead, as Buffett does when it crashes, buy more stocks at a lower price. There is even more potential for profit there. Also, even if the market goes down, you can still make money by purchasing high-quality stocks that are earning money and adding value to the innovation of their customers. You won't have to worry about a crash if you invest wisely. Therefore, choose an investing style that you want to pursue in the future and learn as much as you can about that style. In fact, learn all investing styles and learn what you can from each one. Start with a few stocks and make some mistakes. It's okay to make mistakes and slowly start to learn how to invest. The objective of investing is to enable you to retire from your portfolio at some point, and I wish you all the best as you navigate the stock market. Thank you from Cash Street, where cash is always king.